Welcome back to another episode. Today, we're going to take a closer look at Palantir earnings and what it means for the AI market. We're going to take a closer look at Navitas. The stock dropped 17% after hours. And we're also going to look at some recent updates impacting Nvidia that I think all investors should consider. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so first we're going to start off here with Palantir. And I'm not going to do a deep dive on their earnings because this channel really mainly focuses on kind of the semiconductor, the AI space. And what I believe Palantir can provide, though, is some indication of what's happening in the AI space. And I do believe it's extremely bullish. We can see the stock was up 4% before reporting earnings, and after hours, the stock is up another 4.5%. So he pretty much demolished it. So congratulations to Palantir shareholders. Now, what I found pretty exciting is this. So US commercial continues to accelerate in Q2 2025 alongside AIP revolution. They reported 93 plus year over year US commercial revenue plus 20% US commercial quarter over quarter revenue growth. Their customer count was up 64% on a year-over-year basis and 12% on a quarter-over-quarter basis. They continue to also show a lot kind of great metrics for the overall U.S. commercial space. Now, this is something that I think can be really taken on a top-level overview of how the market is shifting. Right, originally, kind of the big players in the AI space were first your AI hardware, like your Nvidia and Broadcom and other players in that space. Then it was the cloud server providers, as you kind of saw this huge foundational need for AI compute as these big AI companies were doing massive training level at some crazy scales. And now it seems like the next era is starting, and that's the enterprise market. And the enterprise market is filled with so many companies. And if all those companies start to implement AI into their overall daily workflows, all the employees that they have, the demand for AI compute is going to continue to exceed. So that to me kind of just gives me this healthy demand that the enterprise market is where we're just starting off here in the AI space. And this market is going to go on for a long time. The company did give us some guidance. I want to kind of take a closer look at some guidance really quickly. And it continues to go with that same sentiment that I was just discussing. So for fiscal year of 2025, they expect to have about $4.15 billion on their top end. Now, this is much higher than what they gave last quarter. Last quarter, they expected about $3.9 billion. This was one of their highest revenue guidance upgrades ever, which was pretty important. And one of the main reasons for this is U.S. commercial revenue. So previously in last quarter, they expected U.S. commercial revenue to be up 68% year over year. Those numbers have increased to 85% year over year. And I believe throughout the upcoming quarters, they're going to continue to raise this as U.S. commercial is definitely waking up to the overall AI momentum. So again, while I am a Palantir shareholder, I'm not going to sit here and kind of lie that I was super worried about these earnings. I am more worried about just what was happening in the AI ecosystem. So congratulations to those that have a really healthy position in Palantir stock. Now, jumping into the next stock, we're going to jump here is Navitas. And this one, it's crazy how the market works. Just yesterday, I did a video of why Navitas could actually potentially see a massive downturn on earnings, especially if the market was expecting too much. And that's actually what happened. The company also did a few switch arounds here and there that maybe the market is not liking, and we're going to discuss that. But if you want the best semiconductor and AI news, I need you to do the following. First, make sure to hit the thumbs up and the subscribe button. I'm trying to hit 75,000 subs by the end of this year. That would mean a lot. Next, check out my free newsletter, whatthechiphappened.com. If you want information about the AI space, about the kind of semiconductor market, that's for you. And also, I have some special offers with companies like Fiscal.ai. I use that platform on a daily basis. If you are an investor and serious about an investor, check out fiscal.ai/Jose for 15% off on their data platform. It's extremely cheap for all the value that you get. Now, kind of pulling up here with Navitas. So Navitas down 17% after hours, sitting at $6.65. Now, if we kind of look at their earnings, and maybe let me zoom in so we can all take a closer look. Revenue was $14.5 million. And if you look at my last video, that's somewhere where the market was expecting. They continue to mention that, hey, look, we're kind of focusing in the AI data center market, as that is going to be a huge opportunity in the future. So they even raised some cash by selling some shares. They raised about $100 million in capital raise and a new lower cost manufacturing partner. We'll talk a little bit about that in a bit. But throughout this kind of earnings, they do talk a lot about kind of the data center market. There's still industry headwinds that are creating a lot of headwinds, especially for guidance. But they believe the GaN and silicon carbide, so gallium nitride and silicon carbide technologies, can support a 100x increase in server rack power capacity for AI data centers and an expanded 2.6 billion market potential by 2030. And I think that's what investors also didn't like. You're telling me that, hey, look, we're getting all this hype up from this Nvidia partnership, and all you're promising us is a addressable market of about 2.6 billion by 2030, so about 4 or 5 years from now. And they even broke it down a little bit more here. Right, there's like various stages into this AI data center market. There's stage 1, which is like solid state transformers. There's stage 2, which is kind of 800 volt DC to DC solutions. And then you have stage 3, which is 48 volt DC to DC to power AI processors. So again, there's opportunities, but if you look at all these opportunities are potential by 2030. And maybe the market was expecting a little bit more than that. The other thing that we did see was third quarter guidance was horrible. The company is expecting $10 million plus or minus $0.5 million, mainly due to China tariffs risk and more selective mobile strategy. So we are seeing that the Chinese market and China's tariffs are creating a lot of headwinds for this company, as a good portion of this company's total revenue does come from that market. So some of the reasons the stock is down. First, Navitas is caught in a classical semiconductor downturn. Revenue fell 29% year over year, even though it did meet analyst expectations. China market is weakening. They faced a 3.2 million inventory reserve due to demand softness in an unstable tariff environment. You definitely don't want to see that. Policy impacts. Removal of solar and EV tax credit is dampening demand in some of the key growth sectors that they had. And then revenue pressure, Q3 guidance slashed to 10 million, a further 31% sequential decline, reflecting tariffs impact and a strategic shift from lower margin mobile business. So the company is leaving some businesses that they believe are extremely low margin, which makes sense, but it does impact that top line number. Now, there are supply chain vulnerabilities. The first thing is their key supplier, TSMC, announced that it will cease GaN production in July of 2027. They do have another partnership that they announced, but it's still there's still some form of execution failure and transition risk that comes with that. Now, with competitive threats, we talked a lot about them, but there are established players. Traditional rivals with deep resources and customer relationships could easily enter the GaN and silicon carbide space. Aggressive pricing in the China mobile market, competitors are aggressively cutting prices, squeezing margins. And in the AI data center, there's a lot of crowding. The critical AI data center market is highly competitive with 10 different companies in NVIDIA's partnership program, limiting differentiation. So you can see that. Now, overall, there's a lot of headwinds here for Navitas in the short term. If they're able to withstand this, you can start to probably see some revenue growth in late 2026, 2027 with its NVIDIA partnerships, and with some other data center solutions maybe a little bit earlier. Now, am I bullish on the stock? I mentioned that if it got to the 6, I might debate adding a position. After this earnings, I believe this is a stock that's going to continue to be very volatile. The market if they kind of announce another press release with Nvidia or just saying Nvidia's name, it could create bullish momentum. So this is a stock that is going to continue to be all over the place. In the long term of things, I don't believe there's going to be plenty of opportunities, at least for this year, where I can buy the stock at lower levels. So I would rather kind of see maybe some improvements overall. I'm not personally adding as a long-term position anytime soon. Maybe if it gets below 6, I might dabble a little bit. But right now, the market cap is going to be sitting around the 1.2, $1.3 billion. And this company is barely making $50 million a year with the new guidance. Definitely trading a little bit expensive. And I think the market is going to punish this until we get better confirmation of the AI space. So I hope you guys are enjoying the episode so far. Now I want to take a closer look at Nvidia. So Nvidia did it pretty good, finished the day at $180. After hours is up an extra 67 cents. This stock is demolishing it. We got kind of that great news from Palantir about AI enterprise. We got that great news from Navitas that AI shipments is expected to continue to grow throughout the years. Now there is this pretty cool person on X. I do follow him, I'm pretty sure I'm butchering his name, so my apologies. Rehard Jark. He does have, it seems like, a newsletter, but he kind of, there's this crazy expensive software solution out there, a data platform, super expensive. You're paying about $20,000-$30,000 a year for it, but you get a lot of interviews with people that are, you get a lot of interviews and you can kind of go through them and see what the market is kind of discussing. And this interview that he did was some great insight from a Microsoft employee working at Azure on the use of Nvidia or AMD in inference. So I like this because it provides some form of insight in someone that might be a lot closer to this than I am. So first, this Microsoft employee mentions that the Nvidia is 2 times the performance per dollar versus AMD right now. He still views AMD's hardware as behind 2 generations, especially when it comes to interconnect systems like Nvidia's GB200 and NVL72. And this is pretty much true. I mean, I believe one of the biggest strengths that NVIDIA has, and we talked about it in this channel, is the ability to connect 72 GPUs and make it act as one. AMD doesn't have that solution just yet. They will get it with the MI400. But right now, this is the big difference between NVIDIA and anybody else. Now, he talks about how AMD says that, look, our GPU has a slightly higher memory, so it's great for inference. The problem is actually going back to this NVIDIA NVL72. The problem is that NVIDIA is connecting 72 GPUs while AMD doesn't have that capability just yet. So the argument that AMD has more memory is, in his view, is not compelling. And again, this is something that we talked about. AMD can connect 8 GPUs and 8 GPUs with a lot. If you're looking at individual standalone GPUs, AMD definitely has some strength. But NVIDIA is able to connect 72 GPUs together, and you don't have that competition even for inference. He mentions that for inference, you still need to connect many chips because of the latest AI models that are optimized for chain of thought reasoning, which means they need higher memory and longer context windows, which is why NVL72 is a thinking machine. Now, he does mention a silver lining for AMD, which is the future MI400 series. And we've talked about this in this channel, right? That MI400 is going to be the first time AMD is going to have the ability to connect a lot of chips together and kind of compete against NVIDIA with that. So I do believe that's when AMD is definitely going to grab market share. And that the market is also looking for a second source for data center compute. Now, there was a question about Meta, and this is another false news. It gets clicks. It does get a lot of clicks. I saw someone post on X that got a few 100,000 views. I see someone post on YouTube that kind of talks about how Meta is exclusively using NVIDIA AMD for inference. That is complete lies. And if you follow either of those people on YouTube or on Twitter, you should, in my opinion, unfollow because they're providing false information. Meta is primarily doing inference on NVIDIA. This is a fact. He thinks that the reason Meta has tried to experiment with AMD is just to have an ecosystem partnership and to give a chance to AMD because no one wants a single source product, NVIDIA. So that's what the market is trying to find, another type of solution. So don't believe that AMD is doing all the inference for Meta. It's still primarily running on NVIDIA. Now, the final question was kind of talking about CUDA and how CUDA is a big moat for NVIDIA in training. But if the market is going to inference, what's going to happen with CUDA? And based on this Microsoft engineer, Microsoft worker, employee, they say that that is true. But NVIDIA has tried to increase the utilization and done a lot of things to make their inference a lot better. The game of inference is more about scale up and scale down, orchestration, and managing a service rather than running algorithms because you are running inference on a pre-made model. And if we have looked at NVIDIA's most recent acquisitions, they've been about orchestration. They've been about managing service. We kind of saw that Dynamo, which increases inference capabilities because you're doing all this right now. So in inference, CUDA is not a moat, but NVIDIA still has a lot of strength. Now, AMD can definitely make a few solutions here. I do believe AMD has also made some acquisitions in orchestration. Now, I thought that was pretty cool. I mean, make sure to follow this person if you kind of want to read through the interview. I definitely would recommend it. But the overall take is, in my opinion, what I got is NVIDIA is still the dominant on training on inference. AMD is definitely becoming a competitive player, but we really won't see that competition until the MI400. Now, one of the biggest things is CUDA might not be the biggest moats for inference, but NVIDIA is also doing inference acquisitions to improve that solution. AMD, though, now has a better chance of entering that market and maybe taking some market share if the MI400 really is as strong as it comes out. Now, on the bullish side for NVIDIA, their and Rubin Ultra will have, I think, almost 500 GPUs connected, if I remember correctly, or 200. I forget the actual number, but some crazy amount of GPUs connected with Rubin Ultra. If AMD can't follow suit, NVIDIA is going to continue to dominate this inference space. So extremely bullish for NVIDIA in the long term, but AMD definitely has the opportunity, and that's why I own it. But even though it's made it seem like I was bearish for AMD, it's not that I'm bearish for it. You just have to be realistic with expectations. We've seen with Navitas what expectations, overhype, and expectations can do. AMD can definitely compete, but maybe not just this quarter or next quarter. I'm still owning, I'm not selling, but keep those thoughts to understand how this market is evolving. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.